with how to invest in the supply chain of the future is Lauren Hochfelder, co-CEO of Morgan Stanley's Global Real Estate Investing. I thought it was very interesting, and I guess it is intuitive, that you view the commercial real estate market as bifurcated. There are areas that are challenged, very challenged, and the others that are anything but challenged.
Absolutely. Look, I mean, let's remember there's a big difference between changes in interest rates and changes in behavior. And changes in interest rates affect all asset classes within real estate, but we look to invest in sectors that are benefiting from changes in how people behave, how we shop, how we want to live, where we want to work, and all of those things shift demand in a way that has a profound effect on real estate.
And so I'm guessing that you're seeing more challenge in the conventional commoditized office space markets, maybe in large metros. Yes. You can name some if you choose. And really incredible growth opportunities in warehousing, and over 55 living environments and so forth. Two sort of strange bedfellows, I guess you'd say.
Absolutely. You sound like a real estate investor. So
I'm also over 55.
Look, I think on the industrial side, it's really three things that we like about it. One is e-commerce growth, right? So as we've been buying more and more of our goods online and demanding them faster and faster, those warehouses that get those goods to our front doors every day have been exploding. But the second one, and you referenced this up front, this reconfiguration of the global supply chain. I mean, the supply chain of the last 20 years will not be the supply chain of the next 20 years. And that is having profound demand impacts on industrial.
Tease that thought out a little bit. You know, the supply chain has basically been, to oversimplify it, a lot of it has come from China to Europe to America, whatever. Yeah. But now you're having a lot more onshoring of production. Yeah. The CHIPS Act is going to mean a very different change there. Automobiles being manufactured here in the United States. So what does that mean? I drove out Route 80 today, and there was a big, last night, and there was a huge new Prologis, is that how you pronounce it? Prologis warehouse.
Yes. Right
on Route 80. Hadn't been there 5 months ago. Where did that come from?
Yeah, well, look, I think there are really two things that are implicit in what you're saying. The first is we're doing a U-turn on globalization, right? Shifting where we manufacture goods away from China. And the second is we're seeing an increased supply-driven event shock, right? So Baltimore Bridge, tragically, trade disruptions in the Middle East. Panama Canal. By the way, COVID, when we couldn't get protective gear. So all of these event-driven shocks are forcing companies to diversify where they manufacture their goods and how they get them to the end consumer. All of that creates more demand for industrial.
More demand for industrial, more demand for warehouses, more demand for manufacturing ability, data centers. I mean, there's another sea change, what AI is meaning to the need for data centers.
Yes, absolutely. And look, we're seeing automation inside of those manufacturing warehouses and distribution warehouses as well.
So you find investment opportunities for your clients, right? That's basically what you do.
That is what we do.
That is what we do. Talk to me, and if a client comes to you and says, well, how's the New York office market going to do? How's Boston? How's San Francisco going to do? What are you telling them?
Well, look, we've office is experiencing a fundamental sea shift. And I think it's really two things. The first is a dramatic demand reduction, right? So work from home, less demand. But the second thing is, and I think this is really a long time in the coming, is an acknowledgement of how capital-intensive office is. So we really sold down a lot of our commodity office, most of our commodity office before COVID.
Capital-intensive because it's so costly to buy, to build those.
You are constantly investing capital to get tenants and keep them in your building.
Keep them in the building, upgrading facilities, so on and so forth.
Yeah, I mean, we like assets where you can take cash out instead of putting it in.